Hey, I'm Tyler. So while I was recently on vacation taking some time to recharge, I started thinking about 2025 and how it could be your year to buy a home. I know that for a lot of people, buying a home, especially your first one, feels like a huge goal. And let's be real, it is a big step. But here's the good news, it's absolutely possible with the right plan in place. Today I want to share some practical advice on three big things: how to save for a home, what costs to expect, and why waiting for the perfect time to buy might actually cost you more in the long run. Stick with me, and by the end of this video, you'll feel a lot more confident about taking those first steps towards homeownership. Let's start with the big one first, saving for a down payment. This is often the number one thing that feels like a roadblock for first-time homebuyers. I mean, when you hear numbers like $20,000 or $30,000, it's easy to think, how am I ever gonna save that much? But here's the thing, most people don't realize that you don't always need a massive down payment to buy a home. Thanks to different loan programs and grant options, getting into a home can be more affordable than you think. For example, if you're looking at a conventional loan, you may think you need 20% down. That's at least the traditional rule, right? But the truth is that you can often get a conventional loan with as little as 3 to 5% down. That's a huge difference. On a $250,000 home, 20% would be $50,000. But 5% is just $12,500. That's a little more manageable. FHA loans are another great option. With an FHA loan, you might only need 3.5% down, and the credit score requirements are typically a bit more flexible. And if you're a veteran or an active duty military member, VA loans are a fantastic option. They often require zero down payment, plus they come with competitive interest rates and no private mortgage insurance, which can save a lot of money in the long run. Another great loan program is the USDA loans, which also offer 0% down payment options. These are designed to encourage homeownership in typically less populated areas, and they can be a real game changer for the right buyer. Many state and federal programs exist to help first-time homebuyers bridge the gap for their down payment and or closing costs. In Minnesota, for example, we have programs that provide down payment assistance for qualified buyers based on income and other factors. These aren't loans that you have to pay back in most cases. They're grants designed to help you get into your first home. It's worth doing some research to see what's available in your area, and if you're working with an experienced agent, hint, that's me, I can point you toward the right resources and even connect you with lenders who specialize in these programs. So yes, saving for a down payment is important, but it might not be as big of a hurdle as you think. Between low down payment options and grant programs, there are many ways to make home ownership more accessible. Now that we've talked about options for smaller down payments, let's get into how to save for your home fund, whether it's big or small. Start by getting clear on your goal. How much money do you actually need? Once you know that number, break it down into smaller, more manageable chunks. Let's say your goal is $15,000 and you want to buy in 2 years. That's $625 a month. That still sounds like a lot, but if you break it down further, that breaks down to about $150 a week. When you think about it this way, it feels a little more achievable. Next, take a look at your spending habits, and I'll be the first to admit this is not the most fun part, but it is a game changer. Review your bank statements or use a budgeting app to see where your money is going. You might find a streaming service you forgot about or realize how much you're actually spending on takeout. I'm definitely guilty of that. Once you know, you can start making changes and redirect that money toward your home fund. Automating your savings is another great hack. Set up a separate account just for your home fund and schedule automatic transfers every payday. It's like paying yourself first. You won't even miss the money, but you'll definitely notice your savings grow over time. And lastly, I know you hear this on every other finance video ever, but small lifestyle changes can have a big impact. Cutting out that daily $6 latte or skipping a couple of takeout meals each week could save you hundreds of dollars a month. It's not about depriving yourself, it's about prioritizing your bigger goal. Okay, now let's talk about something a lot of people overlook, and that's the cost beyond the down payment. One of the biggest extra costs is your closing costs. These usually run between 2 and 5% of the home's purchase price. Looking back at the $250,000 home, you're looking at an additional $5,000 to $12,500. These costs cover things like title insurance, appraisal fee, loan origination fees, prepaid taxes, and in some cases, your realtor's commission. It's a good idea to budget for these early so they don't catch you off guard. Then there's moving expenses. Whether you're hiring a moving company or renting a truck and bribing your friends with beer and pizza, which does work, moving isn't free. Depending on how far you're going and how much stuff you have, costs can add up quick. Another thing to plan for is home maintenance and repairs. Let's face it, things eventually break and need attention. Whether it's a leaky faucet or a surprise HVAC repair, I recommend setting aside a small emergency fund to cover those unexpected costs. And trust me, you'll thank yourself later. And finally, let's talk about furnishings and upgrades. Even if your home is move-in ready, you're probably going to want to make it your own. Maybe it's a fresh coat of paint, new curtains, or even a new couch that actually fits a in the living room. These little things can make a house feel like a home, so be sure to budget for them too. Okay, shifting gears, let's tackle a big question I get all the time. Should I wait for the market to improve before buying? Here's the deal. Trying to perfectly time the market is almost impossible, and honestly, waiting can cost you. It's what I like to call the cost of waiting. Original. While you're sitting on the sidelines hoping for prices to drop or interest rates to improve, home values are often going up. Historically, real estate tends to appreciate over time, which means the longer you wait, the more you might have to pay later. And it's not always just about the price. Every month you wait is another month you're paying rent, money that's building your landlord's wealth and not your own. When you own a home, you're not just paying for a place to live, you're building equity. Every mortgage payment is like putting money back in your pocket. And the truth of the matter is there's no perfect time to buy. What matters most is being financially ready and finding a home that fits your needs and budget when it makes sense. If you're in a position to buy now, you can start reaping the benefits of home ownership sooner rather than later. Buying a home is a big deal, and especially if it's your first home. It's exciting, it's a little nerve-wracking, and it's absolutely worth it. My goal is to make the process as simple and stress-free as possible for you. So whether you're just starting to save, figuring out your budget, or ready to start house hunting, I'm here to help. If you found this video helpful, can you please give it a like? And if you know somebody who is thinking about buying a home, share this video with them as well. And also don't forget to subscribe for more videos just like this. Thank you so much for watching, and here's to making 2025 your year to buy a home.